answering your questions about retirement. It's Money Talk with Michael Eastham.
My wife and I will be 67 next month and plan to retire later this year. We have $550,000 invested and will have $48,000 in Social Security income and plan to use our savings to supplement as we need it. We want to make sure we have a good plan to make the money last and also have confidence we can get some extra money when we need it.
I really like the way you're thinking because you're trying to be proactive, and that's a great thing. Here are a couple of things that I would also want you to think about. Number one is if you aren't planning for a 30-year retirement, then you need to. Because I always tell folks that it's better to plan for 30 years and only live 25 than to plan for 20 and live 25. You see my point? Now, one thing you didn't tell me was how that $550,000 was invested. If you're just invested in mutual funds, for example, well, then you run the risk of the market being down and having to sell shares when you need to access that money. So one thing that you need to consider is the allocation. Are you allocated for income? If you're allocated more conservatively using things like individual bonds or bond-like instruments like preferred stocks or exchange-traded debt securities, well, then those types of things can provide you a steady amount of interest and dividends, and so you're not as concerned about the value of the principal on a day-to-day basis. It just keeps on ticking. Now, mixed into that part of your thought process, you have to think about not only that 30-year plan, but what about your expenses in 10 or 20 or 30 years? You know, inflation is one of those things that we have to fight every single day. And even at a modest inflation rate, say 4% historically, that means that in 15 years that your $40,000 income need is going to be $80,000. And you have to be able to answer the question, how am I going to supplement that? Well, if you're invested for income, then you'll have a natural income access point through the interest and dividends. Now, if you don't need that income now, as I've mentioned so many times in the past, you can reinvest the dividends, generating a natural organic inflation hedge as time goes on. But for those of you who you've got money parked for income, but you've got more discretionary assets that you can take risk with because you don't need that right now and you don't anticipate needing it for 10 or 15, maybe even 20 years. Well, then you could roll the dice a little bit more if you're so inclined. Take a little more risk, possibly. But that does depend on your individual propensity. Don't do anything that keeps you up at night. Make sure you understand the investment strategy and the advisor that's helping you to figure it out. Make sure that they're a fiduciary so that you know that they're looking out for your best interest and not just trying to sell a particular product that they get paid a higher commission on. Keep all that in mind, and one of the things that we do is to sit down and we develop that roadmap to retirement and help you figure out what does it look like 10 years, 20 years, 30 years down the road to help you live the retirement that you've always dreamed of. Hope that helps, but thanks so much for that question.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.